So I think, and Steve might put me right on this, but I reckon that there's three ways that money from overseas finds its way into the UK economy. First of all, there's foreign direct investment. So companies, people from overseas, businesses, investors from overseas, putting money into UK companies. Then there is foreign earnings. So there's companies from the UK that are operating overseas and repatriating their profits back to the UK. And then a bit like foreign direct investment, there's portfolio investments. So rather than putting money to help a company grow, there's people putting money into stocks and shares in the UK and earning from that, and then that money goes back overseas to wherever they live. So, I mean, there might be others. There's mergers and acquisitions as well, of course. Companies from overseas buy up UK companies and again repatriate their profits back to wherever they come from. So some of this is good, and some of it's not so good, Steve.
Yeah, like I'm. There are obvious cases where you need foreign investment, where there's a product you can't manufacture and you want to have it manufactured domestically. So a foreign corporation has to establish operations in your country to make that feasible. But in the main, the belief that the foreigners are the saviours. What you do when you have foreign investment is you get the initial capital injection, but that's only going to make sense to the company making the foreign investment if they expect to get a positive income stream out of it in terms of profits being repatriated back to the home country of the investor. So it gets you an initial investment kick, but it then costs you an income stream afterwards. And so many politicians seem to ignore the latter issue, and they just want foreign investment. This is what Starmer seems to be thinking will turn the UK economy around, get foreign investment in. But that then gives you, effectively, you have a country of workers. The capitalists live overseas.
Yeah. But, I mean, is it valid, though? Okay, so you're paying the price that a chunk of that profit is getting repatriated overseas. But if it's money that you couldn't have raised locally, then that's fair enough, isn't it?
Well, then this is can you raise the money locally or not? Do you have the domestic revenue stream to do that? And often you don't. But one way that companies acquire that is by exporting. Okay? So another revenue to do that is you have an export revenue that then gives you the local revenue. So you can have the approach can be either you go for export-oriented development or you go for foreign investment, bringing in the capital and then building the physical infrastructure. In the former case, you're starting from behind the eight ball because you don't actually have the technology. This is the situation Japan found itself in after World War II, when I think it was Suzuki who was the first, it may have been Honda, putting ex-American warplane small engines, the engines for the very many parts of a machine, not the engines for the propellers, but engines for other parts of the warplanes, would be attached to a bicycle, and that was the first motorbike in terms of the Honda. Now they could sell those to Japanese. You couldn't sell them to foreigners until such time as you produced a little 175cc thing, which the big companies in America weren't making, and then you got an export trade out of that. So that's the domestic export-oriented approach to getting foreign revenue by selling your products internationally and then getting the ownership domestically, and it means you grow your own domestic capitalist capabilities as well as getting foreign revenue.
Yeah, and then that just steamrolls, doesn't it, in your favour? So if you've got a big export economy like Japan, then you don't need that foreign direct investment quite so much because your companies are making a profit by exporting more. I think that's what you're saying, isn't it? But in the UK case,
the UK is the opposite. The UK, under Thatcher, they made the decision. Well, she made the decision to forget about manufacturing and go with services as the growth industry. And so I remember as a kid watching a show I really enjoyed, TV soap opera called The Plane Makers. Ever see it?
No.
Okay. It was about British plane manufacturing. It used to exist. Okay? It was a great little show. But
I think it still does in the military space. But you're talking about for
commercial planes. So Britain used to make them. Now I think it makes the wings for Airbus as part of the whole Airbus arrangement, but that's about it. And Rolls-Royce engines, of course, which are a classic case of British engineering that's stood the test of time.
Was it the Comet that Britain made?
Yes, the Comet was one. There are others as well, but and there was also was it Hawker de Havilland, or am I thinking a American company? I'm not really sure. So?
No,
Hawker de Havilland.
Well, yeah, but that was largely military aircraft, wasn't it? They had the jump jet.
No,
Was
they also had commercial jets as well.
Oh,
So
did
Britain did have obviously Britain had a manufacturing past. And Britain was the first major country to succeed in manufacturing.
Yeah.
And then
there was a thing called the Industrial Revolution. It was quite popular there.
I think that happened somewhere in a little island off the coast of Europe. Yeah. So this was its foundation. But then this seems to be the trend that politicians do. The power of a country reflects its manufacturing sector. I don't know of any country that has established an empire using imported guns. Okay, you make your own weaponry. That weaponry means you can dominate the rest of the world. Bang, you become the imperial power, and then because you become the imperial power, you get your currency made as the international currency. That means you're now fighting at least a 30% cost disadvantage. So you means that over time your manufacturing loses out to one of your vassals. I don't know. Let's call the UK's vassal state. I don't know. Does America sound like a good name to use? And then America becomes the dominant country. It gets its currency as the international currency. It gets overvalued by 30%, and they start losing out to a little. Let's just. I'll make up a name. So say China. China sounds like a good name. So what you get is the process of being an empire gets undermined by becoming the empire, because you then have your currency used for international trade. You become incompetitive. Your manufacturing sector declines. While it's going down, you saw that services are going to take over. But those services fundamentally were selling debt to other people. Go to an asset bubble. I think there was one in the 1920s. There's one as well in the 1990s and the 2000s. And that bubble bursts, and suddenly you find you can't sell debt to anybody anymore, and bang, your service industry declines. So this is the long-term farce that the UK is also caught up in. And if you have to rebuild the manufacturing, then you've got that old problem. How do we rebuild manufacturing when we haven't got any manufacturers? And that's why people look to foreign investment.
Yeah, so they look for foreign investment to make that investment for things to happen in the UK, which raises the question, well, if people overseas have that confidence to invest the money in the UK, why wouldn't people in the UK have that confidence to invest that money in the UK? Why is it always coming from overseas?
Well, and when it comes to foreign direct investment, it tends to be not a country that matters, but a company. And you have a company which produces something that your domestic manufacturers can't make, and then you think they can either export that to you, or you can encourage them to come and produce it locally. In some ways, that's Ireland's success story, because they persuaded all the tax dodge companies to set up an island. And that's why so many services. Apparently, Viagra is made in Ireland. I've been told this recently. Okay.
Yeah, it's fantastic, isn't it, for a Catholic country?
Yeah, making the major erectile device on the.
Yeah, where you didn't have use of,
every sperm is sacred. So
exactly. Well, you couldn't have an abortion, and let's. It's ironic, if nothing else.
Yeah. That America, the UK could export irony. The UK's main export is irony, but they made the mistake of getting with their political system rather than their comedians. As I've said,
it's as though they said, well, look, we don't think you should be able to buy condoms, and then I think now you can. But they said, what can we do to make sure they don't fit? So they created Viagra, and so everyone, and you couldn't get them in your size anymore. It's all part of the plan, Steve.
I'll leave that one floating in the high air, and you can wear a opprobrium over that one.
But we're getting back to the point about why this. So I think what you're saying is normally it happens because the investment is not coming in because a bit of idle money says, oh, let's put money into the UK, and because there's so much opportunity there. Very often it's a company saying, let's buy maybe a distressed asset in the UK because we've got a bit of cash hanging around, which the Brits don't have. And so that's how it tends to happen.
Yeah, and you've also, because you're running a trade deficit, you've got to have a capital account surplus in the opposite direction. You get the money back in, you've either got to sell assets or bonds, and that's the larger part of where the bond sales occur. That if you have that, you've got to get the you're losing UK, not losing UK pounds are becoming owned by other people when you go through international trade like that, and you have to convert foreign currency holdings into UK pounds, or run your foreign currency holdings down. If you want to get them back, then you've got to sell an asset in some sense, and that's either selling a bond or selling a business or a house. And like a large part of the investment, so-called foreign investment in the UK, is people trying to launder money they've made, well, maybe illegally, maybe from political influence and power, into UK real estate. And what you get is your real estate becomes a speculative asset. And that's a major part of where the capital flows go. They're not actually building a business. They're not bringing in foreign technology for something you can't do domestically. They're driving up your house prices.
Okay, let's just so we're clear on that. So if the UK has a trade deficit, it's selling £500 billion of goods overseas, but it's paying more for goods that it's bringing in. So it's spending $1 trillion on imports, and it's only exporting 500 billion. What are you saying about the way that has to correct itself?
Then it has to. The balancing item is that they have to sell assets to make up that gap,
Right.
And then that's where you end up selling domestic companies, or selling domestic real estate, or selling bonds, which then give you a demand for your currency. Somebody has to convert American dollars into British pounds to buy those bonds, and then you get in that way the balance, the capital account and current account balance in that fashion. So what you're doing is giving away ownership, and that's to me the main danger of, not the main danger, but a major danger of running a trade deficit, is you give away ownership of your own capital assets. And then what that then means is you then have a permanent outflow of money. The profits we were talking about earlier have to be repatriated to the host investor. This is actually the major area that I worked on before I became an academic economist. One of the areas was foreign transnational corporation investment and the impact that had on the domestic economy, and the relocation of production and the damage that did to domestic manufacturing. So I did because the major way this happened hasn't been America investing in the UK. It's been America taking advantage of low wages to build productive capabilities in third world countries, and then exporting from those third world countries back to the first world. And if you do that gives you a three-way table. So you've got what happens to the investing country, what happens to the country being invested in, and what happens to third countries which used to have manufacturing facilities for that multinational, that then get them shut down. And what you find is there are positives for the capitalists in the exporting country, in the country with the company doing the foreign direct investment. Positives for workers and capitalists alike in the third country, in the second country where they're relocating production, but just all across the board negatives for the countries which are host countries of the transnational. That was Australia, was my obvious case at the time. They lose out both on the wages, because their workers lose their jobs in the factories that get shut down, but they also lose in the repatriation of profits, because investment that used to turn up to maintain those factories in third countries also stops. So it's a major. It's part of what ends up in redistributing income from workers to capitalists and making income inequality more extreme, and it undermines countries that don't have transnationals themselves. And then the third world countries, the ones that actually take the investment, the only one that's done that really successfully is China again. So it used that foreign investment to get not just the foreign money to build factories that in 1980 that the Chinese could not build. It also brought the technology, and that's what they wanted. And now, of course, they've run rampant with the technology. The UK, on the other hand, is just it's deindustrialised, has services nobody wants to buy as much of anymore, because nobody's cock-a-hoop about getting into private debt, which is the main service that the service sector in the UK sold. So, yeah, for the UK, I think foreign investment is not a damn good thing, because it ends up mainly being property speculation.
Right, but it sounds like you're saying they've got no choice, because if you've got that balance of trade difference and it's in the red by to the tune of, say, $500 billion,
Which is excessive, but yet it's there, but not quite that big. But yeah,
right? But okay, looking into the future, Steve, it could be there soon. But say it was, so that would be. I mean, people have been spending money out of their bank accounts, so they spend $1 trillion has gone overseas from their bank accounts. We're only collectively getting $500 million coming back in from stuff we've been $500 billion back in from stuff that we've been selling. So that means collectively all the bank accounts would be $500 billion in the red, unless money is coming from somewhere else. And if it's not coming from the sale of goods, then you're saying it has to
it's
be
coming
money
from the sale of assets. Yeah.
right. And the problem with that is that sale of assets is being done for a reason, which is to accrue some sort of profit back overseas. So it's a short-term fix, but a long-term real problem for the UK or anyone else in that same problem.
Yeah,
In that same
and
situation.
that's why we're seeing it turning up now in terms of political discussion, because 50 years ago it looked like a good idea. They're focusing on services, and it was a good idea 50 years ago, because that's largely when the private debt bubble took off. And then with selling debt and financial services and insurance and so on, the city did extremely well. But that performance was only positive when you had a rising level of private debt. Now that's private debt in the UK, I think I've mentioned this in a previous podcast, peaked at about 185% of GDP. It came down to 160 before the pandemic. It's now fallen to 140, so it's come down quite dramatically. But the willingness to increase debt again just doesn't exist there, because corporations, banks themselves, are wary about lending to people in general who won't be able to pay them back. It's only if there's collateral that they'll lend, and the private sector doesn't see the gains anymore. So the level of credit, which used to be extremely high, I mean, the credit in the UK in terms of a percentage of GDP, the annual increase in private debt in the UK peaked at 18% in about 2005, and now it's running at 3%. So the credit engine has disappeared, and it's
right.
Yeah.
But that $500 billion shortfall, that balance of trade deficit, you see, so that could be, rather than just selling assets overseas, it could be money borrowed domestically. So the banks create that $500 billion, which could be used to invest in those assets locally, rather than getting the money from overseas. Then, couldn't it?
Well, I mean, what you've got to have is a domestic financial sector that actually finances investment and innovation,
Right.
and that's not what the UK has right now.
Right, but if you did that, you could balance things out that way.
No, because if you're running out of foreign, you've lost the foreign currency in that sense. If your foreign currency holdings have fallen, you can't replace them with domestic money creation. Okay, but you can finance things with domestic money creation. You don't need to bring in the foreign money to build these objects. So once you've got, this is where I think Burnham and certainly Keir Starmer, that'll do. Okay, Keir Starmer, it's Keir Starmer. He's steering it the wrong way. Okay,
Yeah.
I'll put a patent out on that one before you get a chance to steal it.
Yeah. Okay. That's copyright.
Keir Starmer. Okay, George, there's one for you. Keir Starmer, not George Karma. No, not Keir Starmer. It's Keir Starmer, and he's steering it the wrong way.
Okay. Yeah. All right. So
Sorry.
So you can't substitute that foreign money income with money that you've generated locally, but you could. If you had a balance, if you didn't have that balance of trade deficit, then obviously you could stop that investment, that requirement for foreign investment. If you could borrow, but we don't have that luxury in the UK. We're saying, because we've got that big balance of trade deficit.
Yeah, but also this is what puts me. This is one where I'm in conflict with MMT. I think it's dangerous to run a trade deficit. They think it's a good idea. I think it's dangerous. And so what I want to do is see policies that reverse the trade deficit. Now, the dilemma, of course, for doing that in the UK right now is that how do you reverse the trade deficit? Do you start producing solar panels more cheaply than China? And you look at the technological lead China has, and that is simply just not even worth discussing. Okay, but the thing which the UK could do to turn around its trade deficit is to increase domestic food production. because that's one of the major weaknesses of the UK economy. It imports a huge amount of its food, certainly at least 40%, maybe even more than 40% of the food consumed in the UK comes from overseas. Now, food technology can be quite advanced, and actually Dyson's got an advanced new technique for growing strawberries in an industrial process. And just across I think this is a country called the Netherlands, just on the other side of the UK,
the
across the channel,
Yeah.
And they're the world experts in food production. You could borrow some Dutch technology and see how to dramatically increase food production in the UK, and that could eliminate a large source of the trade deficit. And that's not something you have to worry about outcompeting China with. In fact, there's a British company that has a lead in industrialising agricultural production. So that's what I'm arguing to these political parties that they should do. That it's the fastest way to reduce the trade deficit and therefore reduce the drain on the economy of having to service those foreign investments.
Also, more importantly, import a great deal less, which makes a great deal of sense. Okay, well, I think we've covered a lot of ground there. Look, when we come back, let's go to the question that was asked by one of our listeners, Mark Slater. An article in The Guardian, which we want to pick up on. More to do with bonds. What's going on here? He asked as a question. Okay. So look at that when we come back on the Debunking Economics podcast. Stay with us.
Okay.
So there is more on this topic this week about, and that was all very useful in the first part, about the importance of understanding that you've got to get foreign investment if you've got a balance of trade deficit. And so we're a bit stuck by that in the UK. But Andy Burnham, who is hoping to be, I think, the next leader of the Labour Party, he's sort of jockeying for position now. He's quite well liked as the mayor of Manchester. He was voted in on a good margin in the last mayoral elections, and he says the UK should not be in hock to bond markets. In other words, his big concern is that we issue government debt in the form of bonds. I'll apologise for the terminology. I'm just using the terminology that everybody else does. So those bonds are issued, and a lot of them are bought overseas. And he thinks that drives up the cost of borrowing, because a lot of that, this is where, in that secondary market from overseas, is where that's influencing the yield more than it should. I don't know how we get around that, but his plan is we should have big council house building programs. We should have the nationalisation of utilities, and a charge. But he's saying it should be paid for by a rise in taxes on the wealthy, a charge on expensive London homes. $40 billion worth of extra borrowing is what he's calling for. But in all of that, he's saying we shouldn't have foreign earnings. We shouldn't have foreign investment, in UK bonds to pay for all of this. I mean, is it bad to have foreigners buying up UK bonds
on the secondary market? No, it's one way of doing that international trade balancing equation. And this is. I mean, what if you have a country that that has a lot of imports from Britain? Then it's being paid in British pounds, and it can then either hold those as British pounds and not convert them into domestic currency, or it can tender those at its own central bank and say we want to swap these. So we want to buy and sell sell pounds and buy renminbi on the market. So there's a mixture of ways in which it can be handled by the country selling the bond. But the basic point, I mean, I'm glad he's thinking about this. If what he could realise is the easy way to solve the whole problem is that the bonds are all bought by the central bank. Okay? You don't have to have the bonds being bought by the anybody in the private sector. All those sales are on the secondary market. So the thought that you need foreigners to buy the bonds, otherwise you can't do the government spending, is wrong. And it seems like at least he's got his brain pointed in the right direction, away from the Keir Starmer, or as I'm going to have to continue. I'm going to go with Steer Karma, the Steer Karma approach. Sorry.
You're so pleased with yourself, aren't you?
I like it. It's one of those
rolling in my eyes. In fact, I'm
slips of the tongue that
rolling my entire head, actually.
I thought you were okay, all right, okay, but you got to admit you wouldn't have thought of it otherwise, would you?
No.
Come on, steer
No,
calmer, Keir
yeah,
Starmer.
I'm mildly amused, Steve. Mildly amused.
Okay,
That's the
mildly
best way.
amused. Okay,
Okay, okay. It's certainly
anyway.
not. It does not warrant being repeated over and over again. So
Well, I think
never.
maybe we can reverse the karma of the Labor Party by getting.
When you're having to explain, look, yes. Anyway, now you've lost your train of thought entirely, haven't you?
I have, but he's at least aware there's something wrong with how people in the Labor Party think about government finances.
Wouldn't it actually?
That's a huge plus.
But if those bonds are bought overseas, then I mean, it seems to be you're saying, well, that's going to help this alleviate this balance of trade problem, and that it would be bringing foreign money into the country that we need, and maybe better buying up government bonds than buying up British companies that then take them.
I mean, I'd rather see the money going into bonds than buying expensive housing in the UK, which is what's a huge part of the house price bubble in London, is because the properties are being bought as in speculative items which people don't even live in. I mean, we're doing a tour of Russian oligarch-owned houses before the pandemic with some friends of mine who took that as a major issue. And there's just so much of the housing that is just it's a share portfolio with plasterer. That's what it is. So you don't want that sort of buying. You want your house prices to fall, and so you don't want the money going into the property market. It is better in that sense if it goes into bonds instead.
Well, but
of course, that's not what people will buy for speculative reasons.
No, they buy it for safety reasons, don't they? And people hedge by buying gilts all over the world. So 25 to 30% of UK government gilts are held by overseas investors as of this year. So foreign central banks, pension funds, investment trusts, all that sort of thing, sovereign wealth funds. So basically 25 to 30% of all gilts are overseas investors, 26% Bank of England, and the rest, what's that, 56, so 44% or thereabouts is the UK private sector. So pension, our own pension funds, insurers, banks, all that sort of stuff. So I don't know how that compares with the rest of the world. But of course, the problem with that, I mean, the downside of that is, of course, that the government then has to pay the coupon on to those investors,
which sends British pounds overseas, which the people receive them. If they hang on to them, that's okay. If they sell those bonds to convert, or they sell the income from the bonds, so you're getting paid British pounds on your bonds. They turn up in your account. That's going to be an account which is held at the Bank of England indirectly or through. You're going to have a domestic bank that holds that money. Like you and I both got accounts with Wise, for example. So I've got pounds in our accounts and dollars and so on and so forth. But that's. I think I've lost my train of thought there to some extent.
So you're saying what happens to the money that if they
if they get the money and then say we're going to sell these pounds and buy dollars or buy renminbi, then you drive down the exchange rate, and that's the danger that is seen in that can happen if you have a bond market that's losing.
Right, so the pound becomes weaker. You're saying?
Yeah, the pound's become weaker, which makes your imports more expensive, which causes inflation. So these.
Yeah. And if the pound becomes weaker, then you get foreign investors coming in, buying up British companies because it's a bit of a bargain, and then you get more money going overseas.
Yeah.
I mean, it's a
so that's in that sense, that's the danger of foreign ownership of the bonds, because it makes your currency vulnerable on currency exchanges, and in some ways, like the UK, I don't know whether you say the UK's pound's overvalued or undervalued right now. The American dollar's definitely overvalued. Whether the British, I don't know. But this is the sort of thing which means you have a potential plunge in your balance, your currency, and therefore imports cost more, and you have a balance of payments crisis. It's not like the old days where you could run out of gold, so your value does fluctuate. But if if people lose confidence in your country and they have their own bonds denominated in your currency, then the income stream from those bonds can be sold, converted into other currencies, and that puts downward pressure on your exchange rate.
So confidence is an interesting word, isn't it? So if Andy Burnham came along and said, hey, look, I'm not Keir Starmer or any derivation of that name, and says, "Look, I am going to issue more bonds, but this is what we're going to do. We're going to invest in new tech." So there was the Harrington review about how to make Britain a more effective destination in Europe for investment. And it was talking about green industries, advanced manufacturing, life sciences, digital technologies, creative industries, not food, interestingly, Steve. You should have been there inputting to this. But say you managed to convince people that Britain was moving in the right direction. There's no reason why it shouldn't. Load of smart people, a lot of benefits to doing business in the UK. It's just badly managed right now and has been for a long time. But there's very smart people, good universities, and a lot of capability, as we've said, in the past and still, in some industries. So if Andy Burnham comes along and says, right, well, I'm going to fix a lot of these problems, and I'm going to invest in the right sort of housing, I'm going to invest in the right sort of industries, we're going to build infrastructure, we're going to finish the fucking HS2 rail network, and all of this stuff, and all of a sudden everyone goes a bit like with Tony Blair. Well, this is cool Britannia all over again. This is a place to invest. You get that confidence, people would want to buy those bonds, wouldn't you? And wouldn't they? And that would be, and at the same time, you might be having more companies locally saying, well, we're going to raise our own capital domestically. We're going to borrow from the banks to make the investment rather than relying on that money coming from overseas. And then you start to see that trade balance starting to disappear. It's that combination, isn't it? That's what you've got to do. You've got to take all of those parts together and say, let's build the confidence, let's build more locally, let's get our balance of trade down, encourage foreign investment, and in the meantime, yes, we'll sell bonds, we'll issue more bonds, we'll sell more of them overseas, but ultimately, we want to reduce that as well. That would be the step process through all of this, wouldn't it?
Yeah, that's generally speaking, yeah, and that's pretty much what China did 50 years ago, starting from a far less good base than the UK has right now. It's a large part of this is going to be turning around education as well, and this is a huge issue for the UK because they've lost the skilled tradesmen, and they've British universities have also been caught up in the whole neoliberal belief that selling education, selling credentials is what they do rather than really teaching people. I'm very sceptical about the UK. The university sector, having been part of it for a few years. But you have to increase your skill level for your people. And like China's done it on a grand scale, it is doable. But now, I mean, when you get reports of American manufacturers going over to see what Chinese battery production is like, for example, and finding they're walking into factories which don't have lights because there are no humans working inside them, 12 production lines producing the batteries, et cetera, unless you get a really serious innovation that Chinese haven't developed, you can't compete with that. So this is the worry that even though you've got a higher skill base, you've got to completely change the direction of policy, which has all been about, promoting services, all the neoliberal stuff. To get to the stage where you try to develop manufacturing and increase your skill level, it's going to be a very hard task for the Brits, which is why I suggest food as one of the areas where you could do it rapidly, because as well as replacing the imports you currently make of food, you'd also have to rapidly skill up your workforce, skill up your manufacturing sector to start making the manufacturing components that are going to make it possible to produce that food domestically rather than internationally. And on that front, I mean, I haven't taken a look at the Dyson factory, strawberry factory. I'd like to see it. But you need to have innovators in your own country that can give you the lead that way. And it still has it, but Britain it has to reverse direction pretty rapidly. So if Barnum's thinking that way, I'm glad to see that maybe there's a chance for Labor turning around if they get rid of, is it SK or KS?
KS.
KS,
So,
okay.
So does this make the problem worse, though? The UK actually invests a lot more overseas than we get investment coming in, to the tune of 27 times more. So
wow, the portfolio investment overseas and...
Yeah. So our investment overseas is 27 times more abroad than foreign firms or individuals investing in the UK. So that means more UK money going overseas. That makes the problem worse, doesn't it?
Well,
I
in
mean,
fact,
on the face of it, you'd be thinking that's good because we're getting all that money, that
the
profit's coming
portfolio
back.
investment leads to a cash flow coming back in the opposite direction. Yeah, so that's a positive in that sense, but it shows the extent to which financial speculation dominates how capitalist economies function these days. And one, I've got to see if I can find it. My old mate Troy Andresen tells me there's one paper where Keynes writes, and above all else, let finance be national. Well, that's the exact opposite of what we've done. And so we get these games being played in international markets, which we should really, if we had the Bancor and the system Keynes put forward, we wouldn't have anything like the scale of financialisation that we have now. So Britain, the city benefits from that, but the rest of the country does fairly poorly.
And your point about real estate. So just to give that some context, the Shard in London is owned by Qatar, sovereign wealth fund from Qatar. Canary Wharf, majority owned by Qatari investors. Harrods, Ritz, Claridge's, all owned by Qatar. There's one part of the world which seems
so
to...
you live in northern Qatar, do you?
Yeah, I think so. Yeah. I should have got a discount. I flew Qatar to Australia, actually. Damn good airline, by the way. The best I've ever flown with. But yeah, I mean, they are my airfare probably helping to buy up the next bit of property in the UK. A lot of UK high-end homes, as we know, is owned not just by the Russians. The Qataris are there as well. 32% of prime London properties are owned by foreign investors. I mean, that makes no sense.
None at all. And then that's, again, you've turned property into a speculative asset rather than accommodation. So there's a huge amount of things to reverse. 50 years of mistaken policy. This is the dilemma the UK is in, because the confidence of Maggie Thatcher and Ronald Reagan about the wonderful world they were bringing about by deregulating and reducing the government role. I did the numbers. I didn't do this for the presentation I gave at Jeremy Corbyn's conference a few weeks ago, but I've done the numbers since for a presentation I would like to put on YouTube once my YouTube channel is restored. And that is that if the rate of per capita
goes out, because this is a
sorry.
Hopefully it will be by the time this goes out. You've got a real problem.
Let's hope so. Okay. If it's not, I've got to show us a new channel. But the rate of per capita economic growth in the UK and America before Thatcher and Reagan took over was about 2.5% per annum. So there's every year, on average, you got 2.5% better off. And they thought it was terrible, and they're going to drastically improve that, make us much better off. And there's actually a clip I've got for Reagan where he says, our children will thank us, and that'll be thanks enough. Well, if you look at the rate of economic growth, per capita growth since Reagan and Thatcher took over, it's about between 0.7 and 0.8% per annum lower than what was happening beforehand. Now, when you compound that over 40 years, the impact is that over 40 or 50 years, the impact is that the per capita incomes in the UK and the USA are 40% lower than they would have been if the Reagan, pre-Thatcher rate of economic growth had been maintained. So rather than being a success, it's been a failure, and you can actually see it in the numbers. And that's like a lot of the complaints people have. I don't think it'd be anywhere near as many complaints about life in the UK and life in the USA if per capita incomes are 40% higher than they are now.
No, they wouldn't. And that's it. I mean, the biggest problem is people are really struggling. I mean,
they are. And you can feel, I mean, I had the classic experience just in my own personal case when I moved from Australia to UK. I got the same salary I got in Australia, and I then did the numbers and worked out that I was 40% worse off on the same salary. And the same thing, a couple of conservative economic friends of mine did the same calculation.
Right.
Sorry?
Because of the cost of living.
The cost of living. And the cost of living is bad because incomes are low.
Yeah, really don't think that would be the case now, because the cost of living is
40%. Yeah, we had 40% higher incomes. Yeah, I wouldn't have complained, and neither would Brits. So it really is a sign of you had failure for that length of time. But admitting that you've made a mistake and changing direction, that's the hardest thing for humans ever to do. Right. And I'm glad Burnham is actually doing some of that inside the Labor Party.
Yeah. Well, okay, and there's an obvious elephant in the room we haven't talked about, which we'll finish with. But just to put you right on Australia versus the UK, Australia's more expensive now. I mean, the wages are higher here, but for a Brit in visiting Australia, things are more expensive than they are in the UK, quite a bit more. So so that's turned around over the years. But okay, here's the elephant in the room. So imagine if you were in charge of a country where you had a big balance of trade deficit, and therefore you had to have investment coming in to try and bring that extra money into your economy. You'd say, well, okay, I need to stop. I need to get more of that investment happening, but it's got to be the right sort of investment, and I've also got to stop our people from buying stuff from overseas. Why don't I introduce tariffs to try and reduce that balance of trade deficit? Would that be a good idea?
That is part of what should be done. I mean, every country that is successfully industrialized has used tariffs at some point to achieve that, including America during the 19th century. That was Michael Hudson's PhD thesis, just the extent to which industrialization occurred behind tariff barriers. But you've got to do it sensibly. I mean, look at what's happening with the yellow man in America. It's crazy, and that's just destroying any. But you've got to have a determined policy where you bring it in, and then you tell the companies that tariffs going to fall from now on, and you've got to maintain competitiveness. And that's the pressure that Japan put its companies under when they went through the same expedited industrialization after World War II. With the METI, their tariffs were protecting domestic manufacturing to some extent, but they were told those protections are going to decline. You have to improve your technology over time or you lose. And so it isn't just the tariffs themselves, it's the direction to the domestic companies. Improve your technology so you maintain the lead, and then we can pull the tariffs down. And finally, you have low tariffs, but the thing is, the Japanese at that stage made better cars than the Americans, so the exports were cars from Japan to America, not vice versa.
Okay, final statistic then. Tell me whether this is a good or bad thing. So, of all the stocks listed in the UK, 56% are owned by foreign investors. I mean, that would go some way to helping to bring the money back into the country to help counter that balance of trade deficit, wouldn't it? And so it wouldn't be a bad thing.
Well, I mean, what it means is most of your capitalists live overseas. Okay, and this you don't need for them to leave the country. They don't live there in the first place. So that is a real limitation, and this is why I'm
well, not necessarily, but they're not necessarily Brits living overseas. They could be American funds, wealth funds.
That's what I mean. They're you're capitalists. You're owned by capitalists of another nation.
Yeah.
You're a country of workers, and workers don't invest. So you're a country that doesn't invest, and that's a major problem.
Well, it's been an interesting half hour, Steve. I've learnt a bit there. That's good.
Including steer karma. Yeah, I mean, you really enjoyed that one. Yeah.
Yeah. Well, Andy Burnham, you're on the right track, but fill in the detail.
Yeah. You've got to steer the karma that you currently caught up courtesy of Keir Starmer. So yeah, maybe there's a chance for the Labor Party after all.
We've run out of time, so we'll finish at that point. Good to talk, Steve. We'll catch you next week.
Steer karma.